You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I sound like I'm back to normal, for the most part, at least it's because I'm back in the studio after my global traveling to various conferences. And by global, I mean to both coasts of Florida. So I'm talking a little volatility on one coast, talking a little bit of futures action on the other coast. But I'm back now in scenic and sunny Chicago for a whole full day of shows. Looking forward to it. You can tell my voice giving out a little bit after talking from a week and a half straight. But I think I got a couple more shows in me for our big Friday show palooza. So we'll see. We'll see how it holds up. I'm drinking some tea. I'm doing all the good things over here to keep it going. But I think I got another couple shows in me. We'll have to see. And to help me do just that, before I even get to who's helping me, make sure you guys, if you haven't already, subscribe on your platform of choice, and then make sure, if you're available every Friday, noon Central, 1 p.m. Eastern, then hit us up over there on the old Mixlr, MIXLR. You can get it live. For all of you, I know some people are like, man, I really want to get it quick, but for whatever reason, I want to listen live, or maybe you can't turn in live, but you don't want to wait till the podcast. You can still get the show reel there as well. We keep them up for a week or so before we yank them. So you guys, if for some reason you can't wait for the podcast, you want to get it there, Mixlr is the place to go. Again, it's going to be like the raw, the uncut version, but it won't be as nice and pretty as the podcast. But it'll hold you over until all that stuff's available. Of course, however you listen, live after the fact, hit us up, questions, comments, insights, pearls of wisdom, all that good stuff. We do enjoy hearing from you guys. And joining me on the old Vol Views program today, our friend Russell is off once again in the forests of Kamloops, British Columbia. I teased him about it. If you remember, listeners, about a year ago, he was over there. I told him he found literally the only VIX trader in the forests of Kamloops and had a conference with him. Apparently now he's doing that again, but also adding in a crypto element. So he's up there for some crypto event. So he can't join us, but of course we got a good stand-in nonetheless. We got the Rock Lobster, Mr. Andrew Giovinazzi, who's been doing yeoman's work on the network here. Mr. Rock Lobster, I have to admit, I caught most of Option Block yesterday on my way to the airport. And I have to say, I think you listening to me host for all these years, some of that's starting to rub off on you. You did a pretty fine job, sir.
You know, I try to catch the enthusiasm. I don't have the Longo voice. I'm a little nasally sounding, and I don't have that voice for radio that you have.
I don't think I have it today either, so that makes two of us.
We can share. We can each swap nasally voices for the listeners. They'll be thrilled to death. Thrilled to death.
No, we did an able job. Check it out if you haven't yet, listeners. Check out yesterday's Option Block to hear Andrew's big hosting debut. It was a fun one. I was pleased. I was educated. I was informed. I was entertained as I sat in traffic on the way to the airport, which is can't ask for much more than that from an options show. You can't ask more from us than to keep on rolling right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Time for the Vol Review. Of course, a portion of the show will review the week that was and indeed still is from a vol trading and trending and unusual activity and all sorts of different vol perspectives. If it involves vol, chances are we'll talk about it here on the old program tech. I mentioned we are recording this and streaming it live a little bit past noon central here. The one true time zone. Who knows? If we all skip off daylight savings or stay on it, then maybe it will be the one true time zone. We shall see. Either way, interesting stuff on the street. A little bit of a mixed bag out there today. S&P and the Dow. Everything was kind of in rally-ho mode. Now it looks like the tech-heavy NASDAQ coming off a little bit, off slightly, 0.1% on the day. S&P and Dow still up. S&P up roughly 0.5%, close to it. Dow up a little more than that. All of that means VIX cash taking a little bit of a break, a little bit of a respite today. Back in the nice 15 handle, 15.33. In fact, I'm liking this trend, Mr. Rock Lopsticks. I believe I was the highest of the bunch, I believe, last week, and I believe I was right around 1475. So this puts me within spitting distance, sir. So I'm feeling good. How about that? Are you feeling good about that 1475 by the end of the show, sir?
I think that has a reasonable shot. So once again, your crystal ball prognostication not doing bad. Not too bad at all. I think I'm going to say 1505 though.
1505. Well, yeah, with that 1 hour prediction, it's amazing how much more accurate that could be than the old 1 week prediction.
I'm going out on a limb there, Mark. Way out.
That was almost as good as your SPX vertical explanation from a long time ago on the option block, which is also good stuff. But yes, of course, vol coming off kind of mixed bag across the board. Like we said here, interesting stuff. Our old friend, ye old VIX cash. Doing a little bit of paper today. It's a little bit past halfway through the session. Already 685,000 contracts on the tape. About 2-to-1 calls over puts. So a lot of stuff lighting it up. Andrew, it's been, an interesting, shall we say, week from a vol perspective. A little bit lofty, then coming off a little bit again. Kind of a lot of vacillation. In fact, our old friend VVIX hovering right around 100 level yet again. So again, that's in the lofty territory. Coming off a little bit again today, listeners, off about 5 handles there. But still, anything 100 or more, you're getting into active territory out there. So we know our friend the VIX is rocking and rolling. Amidst all that rocking, Mr. Rock Lobster, what caught your eye this week, sir?
Well, there's a couple things. One is, I think it's hard to believe, but near-term implied vol per strike was probably at its high Friday after we had that massive rally. We've kind of spent time giving back some of that rally, but implied volatility per strike has pretty much gone down all steadily since the beginning of the week. So that is let's just call it a skew phenomena where you have that massive rally and the liquidity provider jacks up the curve a little bit on the downside. But vol per strike has been going down. I've been watching it just tick down, tick down, tick down, tick down the whole week. We haven't gotten more volatility, or we haven't gotten, let's just say, what do the technical people call it? Wider candles. Our candles haven't been bigger. But we've had a kind of a slow down tick in vol. We've had the vol futures go down. Still, what I would call them still kind of below fair value for time. So they're not, they're dropping, but they're not in kind of that super happy, comfortable mode yet. Definitely lower. We're seeing, I believe we're touching what I would call like recent lows for the vol products, meaning I think this is around the lowest level they've been touching in the last month right now. So all said, this is usually what I would call zone 2, where it's possible we could take one more leg down to zone 1. where you could actually make some hay in the vol products because the percentage moves are bigger and the premiums are smaller. So actually this is better opportunity if you trade the options in the vol products on the downside, just because the way the arithmetic works out. Because when we were way up there, when VXX and VIX was super high, you know, a put was $10 or $8 or something like that. Now they're getting down to little tiny dollars, and we could get a better movement. So it actually, the options are a little more fun here to trade. Doesn't mean you can't make money up there either, but the scale is different.
You know, before we keep going really quick, I know you've broken it down before, but it's probably been a couple of months. You have these zones you often refer to on the show, Zone 1, Zone 2, Zone 3. Really quickly, for those of me who have joined us more recently, break down really quick what you mean by those zones again.
Sure. So what I try to figure out is, you know, when you're on the floor, you're a trader, you just assume that everybody knows what volatility is, because every day you were it was slapping you in the face. Like
everybody knows how SPX verticals, you know, go out.
Yes,
of
exactly. Exactly. So what I try to figure out is, how am I going to explain the concept of volatility to people? And I was just teaching retail. I had always taught floor traders and stuff like that as a floor trader. So I was trying to figure out a way. So I came up with like the zone concept. I don't even know if anybody's ever talked about it like this before. I have no clue. But I know at Option Pit, if you want to learn how to trade volatility, and the Greeks kind of by where vol is, that's what we teach. You have zone 1. So basically, I broke it down, I eyeballed observation, how vol moves. And I'm picking VIX because it's the thing that people can understand. It's on VIX Central. It's easy enough. And I have zone 1 is basically the lowest quartile, which is, let's call it 9 to 13 or 9 to 12. And vol acts a certain way down there when VIX is somewhere between 9 and 12. Then you have 13 to 17, right? Where now you're kind of moving at kind of that 1% per day SPX, where the market's sort of picking up, and it's kind of what it's been like now. It has a tone. You know, the average daily range, you know, as predicted by the options, is somewhere around 1% a day, you know, give or take. Then you have zone, what I call 3, which is like 18 to 23 vol. That's the third quartile approximately of kind of where VIX lives when it's moving around. And that is, again, that's another character where, now all of a sudden the SPX is moving more like 25, 30, 35 points a day, 40 points a day. The daily moves, the daily swings are bigger, which kind of changes the character, the type of positions you want to look at if you trade vol. If you just want to slap some Apple puts down, you know, you're going to get good prices then when VIX is in zone 3. And then zone 4 is anything, I would say, 24 and above. Now, you would say, well, Andrew, why did you just pick 24? If you break it down percentage-wise, about 25% of the action is 24 vol and higher. You know, that could be anywhere from 24 to 80. So zone 4 is very much where it's also a level where VIX options or the VIX futures are in extreme backwardation normally, meaning that means VIX cash can be literally anywhere. It can be 30 or 35. But the VIX futures actually trail that cash by a significant amount. Sometimes it could be, $7, $8, $9, depending on what's going on. Just recently, there was probably $8 of backwardation in the near-term VIX future at one point. In early February, VIX was trading 35 and the future, might have been trading 24. So there is a significant lag in how that trades. So it changes the type of positions you put on. Different things look better. Different things have different kinds of edge. The way I look at edge in the marketplace, a fly looks a lot different. So by breaking things into zone, you also break down the character of the position you want. So when I'm teaching people about options, first when I do our gold, pro, and platinum sessions, I kind of get their heads in where volatility is, and that helps them select positions for the vol we are at. And then that is just what I go, it's just a process. It's like how you try to teach floor traders. You're teaching them how to respond to positions because they always have to take these positions they don't want. But a retail trader, they have control over entry. So if you have control over entry, you want to know the best type of position for the volatility that you are currently being served up. And that's kind of what the zone is. I kind of did it in a long-winded way, but so basically 1, 2, 3, 4, that's the idea. And right now we're in zone 2. We're down zone in zone 2. So
down zone.
To me, down zone. There's always up zone and down zone.
Is there a red zone like in football? Like zone 4, I'm guessing, is the red zone where you're like, whoa, sirens, get the hell out of Dodge, take your ball and go home.
The red zone is probably when I overhedge my positions and get greedy. I think that's the red zone. That's when I actually think I'm smart and I go, oh, that's going to happen. And then, the market jumps up and slaps me in the face every once in a while and says, nope, that's not going to happen.
Yeah, listeners, some of the best shows are when Andrew's working something and he misses it right before the show. And then he's grumpy for the entire show. Those are always good moments. But you're right. You bring up kind of the educating of floor traders and things. And the analogy is good. I always say that, the floor traders, you learn. It's a great way to learn because you're always on defense, effectively. You're getting this stuff thrown at you left, right, and center. You have to figure out some way out of it. Whereas you're right. The retail trader, they get to initiate. They're on offense. They get to pick their moments. So when you have that, you have an advantage, and you should be able to hopefully know what to do with it, especially when VIX is in that uber juicy zone 4. But right now, we're not in zone 4, as you mentioned, hovering around Andrew's zone 2. That should be your next book, VIX by quartiles. Maybe a little bit sexier title than that. VIX in the red zone. There you go. VIX in the red zone. How about that for your next book?
I want to be out of the red zone.
Yeah, but
all zones but red zone.
For book titles, though, you want to be deep in the red zone because that will move off the shelves. VIX in the red zone, I guarantee you, 10,000 copies minimum. Bestseller, New York Times. There you go. So yeah, there you go. Buy Andrew's forthcoming copy, VIX in the red zone. And maybe parentheses you put below it and how to stay out of it so you can be clear. But yeah, right now we're not in the red zone. VIX Futures, VIX Cash hovering around, like I said, 1540 or so. The futures, pretty tight and kind of in lockstep with it. You see in the front month future about 0.4 of a point, a little bit higher than it. Not too much more for the second month, about 0.8 out there. So we're not seeing any real big sharpness, nor any real steep super crazy backwardation either in terms of like what we've seen over recent weeks out there. Excuse me, my voice coming in and going out a little bit out there. But anything else catching your eye, Mr. Meatball? Mr. Meatball, I apologize, Mr. Rock Lobster. Now that we've broken down the zones, anything else catching your eye from the term structure or anything else before we move on into the VIX options themselves, sir?
The biggest thing is it's the first single-digit vol I've seen this in the last 6 weeks was today. So I'm starting to see, I know it's hard to believe, but single-digit vol in some strikes, in some cycles. The March 26 cycle, even though it's a Monday depressed vol, 9%. So not very long ago, those numbers were more like 18, 19. And now they're 9. So whatever Strum and Drang, if I never say that right, Sturm and Drang, I can never say it, was getting everybody all flipped out. It almost feels like they're taking the vol down a little fast right now, personally, but the happy people are coming back. So they're coming back in a happy way. So we'll see how long it lasts.
What's not to be happy about, right? VXX is down, SVXY is up. All is right with the world. I know that'll make a lot of our audience at least pretty happy. I mentioned Mr. Rhodes out there in the fields and forests of Kamloops, so no weekly rundown today. We'll break down this interesting nugget where it came from the RMC conference last week. They're talking about the breakdown of volume out there in VIX options. And you can probably pretty much do the math yourself. They did it for us, which is nice. That kind of overall volume is still roughly, the VIX hasn't really seemed to, I mean, we talked about a lot of flow going into the weeklies, but it is a very high volume product, still a lot of institutional. They still haven't migrated a ton into the weeklies. It's about, right now, it's about 90-10 in terms of overall volume of the standard, regular old monthly options versus your weekly options. So 10% still, when the name's putting up 1 million contracts a day, that's still a lot, but yeah, not quite the close to 50% we're seeing in some of the big indices out there where the weeklies have really just taken off. Speaking of the big VIX options, like we mentioned, it is still rocking and rolling these days with the ADV right around a little bit north of 1 million contracts a day. I mean, think about that, listeners. Think about how many other products out there you can think of off the top of your head that average 1 million contracts a day. And this is not some tiny little small 1/10 size contract or anything like that. This is an actual regular meaty old contract doing 1 million contracts a day. This week, today, let's see, so far, I think we were pushing about 700,000 coming to the show, right a tick under it, about 695,000 right now. So we'll easily break that during the course of the show. Throughout most of this week, it's been a little bit shy of the ADV, about 711,000 contracts going up yesterday, 657 on Wednesday, about 604,000 on Tuesday, Monday, 510,000. Also interesting, Mr. Rocklops, I know you're not a big fan of this data point, but this one is so low it kind of caught my eye. I can't remember the last time we've done a show where it's been this low. The VIX call to put right now, Mr. Rock Lobster, 1.9 to 1. That's easily the lowest it's been since we've been doing the show in years. I can't remember the last time we had a show where it's been that low. Does that put that back on your radar at all, that indicator of all things madness in VIX?
I wish I knew more about those indicators like that. So that's 1.9 calls. So that's nobody's trading VIX calls, is what you're saying. Is that what you're saying?
Well, I'm just saying. Even in the open interest, it's come down. Obviously, it makes sense. We swung up, the calls made money, they came off, then we swung back down. People putting on puts, so it makes intuitive sense when you think about it. But still, I know a lot of people get up in arms about that indicator when it gets super high. I don't know if super low is also on their radar, but it is trending toward. I can't remember the last time it was below 2 to 1. It's been some time.
I think too. Another thing to think about is when was the last time we had a 40 to 15 swing in a month? It's been a couple of years. So there's I'm just thinking massive. You're right, massive unwinding. And what's weird about VIX is everybody's more uncomfortable with the puts than the calls. So they're like, they get the skeevies when they talk about VIX puts because they're not quite sure. They just want to be long it when it goes up. They're not quite sure what to do with it when it goes down. So maybe that is a slightly bearish indicator for it. So I'll take that for what I think it is, and I'm going to say it's a slightly bearish VIX.
Yeah, it's kind of funny because whenever that gets up around 4.5 to 1, people start hitting us up. All the people who follow that and saying, "Oh, it's at that level. It's crazy town." We're not seeing people hitting us up on the other side of that. Say, "Oh, it's super low." I don't know why. Maybe people only watch it for one direction. I've kind of joked about that one in the past. I don't put these call to put or put to call ratios too seriously, and a lot of people out there do. But still, this is just I always mention when they kind of hit those extreme levels is when they kind of come on my radar, and we're certainly floating around an extreme level right now out there in just the, shall we say, lack of net interest out there in VIX calls these days, which, given the performance out there of late, kind of hard to blame them. In terms of what is interesting people out there, where are the hot VIX strikes? Number one with the bullet out there, our old friend, the March 25s, way off what they were not too long ago where they were pushing 500, 600,000 contracts. These days, back down to a far more reasonable 376,000 contracts over there for our number one hot VIX strike, the biggest position out there in VIX land right now. Number two, the March 15 puts, 315,000, actually 314,999, so a tick under 315,000 out there for the March 15 puts. Number three, the March 22s, a little bit north of 300K on that strike. Number four, our second, a lot of puts on the list. Again, going back to what we were talking about before, puts back on the menu these days. 281,000 of the March 14 puts. First time March 14s have really been that prominent on our list. Followed by the March 17 puts, number five. Also, I think a bit of a new entrant to our list here. 265,000 contracts open there. Number six, the March 18 calls, just a little bit under 250, a little bit under 250,000 contracts on that strike. Number seven, the next put, on a lot of puts on the list. Actually, it looks like, half of our top 10 this week is puts. Again, getting back to what we were saying before, puts leading the dance these days. 242,000 of the March 12s. Number eight, the March 20s, 240,000. Number nine, April 22s. They've been persistent, remaining on our list. The only April contract on our list for weeks now is the April 22. Someone out there has got a lot of love for those. 240,000 of those open. Number 10, rounding out our top 10 big VIX, hot VIX strikes here, the March 18 puts, 235,000 contracts there. Total of about, looks like about 13.9 million contracts open. That's a lot of open interest, listeners. About 9.2 million on the calls and about 4.7 million or so on the puts. Mr. Rock Lobster, I was digging around. But before I even get to that, any VIX options papers catching your eye? I know your buddy, the Meatball, was talking about his favorite trade of late. Someone put on the July 10 75 strangle, which is not good. That's certainly for the recent memory. I think my favorite VIX weird trade. Anything else catching your eye out there in VIX options these days, sir?
I hope they sold it.
Yes, they did. They did.
Nothing standing out, although I am starting to see, they're a little more grind in all those downside puts. People are starting to get more interested in, they're getting more interested in them again. It's weird how the lower VIX get, that's why I do the whole zone thing. I sort of like the lower it gets in the zone, the more interesting all of this stuff becomes because the payouts look so much better. So, and it seems to be, looking at the volume today on some of these strikes, that could be part of the reason as well. So that would be the only thing I see just from a recent point of view. Besides, 128,000 March 25 calls traded in VIX. That's a fairly big print today. I don't know what they're expecting, but that's a pretty big chunk of contracts out there to be 10 handles out of the money with a week to go.
Yeah, there was some actually weird paper lighting it up today, which kind of caught our eye here going into the show. Went up a little bit this morning, actually. It was kind of a funky one. Looks like on first blush here, Mr. Rock Lobster, it looks like an iron fly in VIX with a really crazy call kicker. That's about the best way I could describe it. It was let's see, where we got the strikes here. The March 21st, so expiring on the 21st, 14 half, 15 iron fly. Did it 10,000 times. Actually, it wouldn't be an iron fly because they didn't do it. Actually, yes, it would. It would be an iron fly because they did it on the same numbers, 10,000 times. So effectively doing that looks like that 14 half straddle 10,000 times, doing the calls $1.50, the puts 32 cents, and leaning towards, I guess, it looks like they bought that, which makes this kind of funky. And then turning around, looks like perhaps, again, the execution on this one, it's kind of all over the place. The 14 puts, maybe for 18 cents, selling those out. 15 calls for $1.23. 10,000 times also perhaps selling those out. But really, what really caught our eye, the iron fly alone was kind of funky. I think they did the whole thing net for like 40-odd cents, something along those lines. But then they came around and picked up 10,000 of the March 42 half calls for 3 cents, Mr. Rock Lobster. All pretty much on the same trade. So there you go. Is that one on your which zone is the March 42 half called? That would be beyond zone 4, I believe.
Well, no, it's in zone 4. It's just deep in zone 4. I'm just trying to think of the propeller head that put that on in the first place. What that all looked like.
Yeah, the calls really caught my eye out there. I had to do a little digging when I saw that. I was kind of like, what the? They paid 3 cents for them 10,000 times. Then I did a little digging, and there's about nearly 60,000 contracts open on that strike. So if he's piling on, it's weird. All the execution list looks weird. The way, if it is an iron fly and they did buy that, they didn't really give themselves a lot. They're looking to make maybe a dime on this thing if it works their way. And then the 42 halves, I can only assume those are closing, and maybe they got a good price on those, selling those out. I'll have to go. I haven't had a chance. It's showtime. I haven't had a chance to go dig in when that open interest was open. So hopefully I'm going to be charitable and assume he sold those when VIX was in zone 4, Mr. Rock Lobster, for a hefty penny. And maybe he's closing those out.
I'm thinking, if it's a close, if I'm looking at it from, instead of looking at it from right now's point of view, we look at it in the middle of February. And in the middle of February, we were seeing the 25, 26 handle in the future. They might have bought those 42.5s to hedge selling some deep, meaty calls in VIX to try to put on a giant synthetic put. And they also sold the puts at the same time just to, pick up a little more premium on the sale because they figured down there it's not going to matter because they're already short all these calls. And maybe they just put on a giant synthetic up there and when VIX was crazy just because that was a more margin-friendly trade. So I just got curious. That would be what I would call a very flat skew trade, because when the vol was super high, that 42.5 call relative from a skew point of view would not be as expensive as it is, let's say, right now. So maybe they just saw something there. Maybe those 14.5 calls were super expensive, and they went to, this is an unwind play after being massively short VIX, and they're like, this is close enough. We'll take our money off and go home. So there's enough open interest for it to be closing. So anyway, that's my random first blush thought at that trade.
I definitely, I'm going to hope it's closing, because if it's closing, then maybe he did all right on this one after all, at least on those crazy calls. There's so much size on these other strikes that, it certainly could be closing there as well, but they're still a little rich for him to be closing those out. But still, you're right, it is interesting. We have been seeing a lot more of these funkier trades going up in VIX land, and by that I mean, things you don't normally see, size straddles and strangles out here in VIX, which are not the trades we usually see. Usually we talk about, the 1x2s and things like that, and those are the types of spreads we usually see, a lot of verticals and things, but straight up straddles and strangles, and now iron flies, not so much. So that's interesting in and of itself. Again, maybe reflective of the fact we're back in another regime, Mr. Rock Lobster, because when's the last time we talked about size 1x2s, outside of our whale friend, who's pretty much closed out, and that ratio was looking a little scary for a little bit. But yeah, interesting stuff out there in VIX land. We're going to get to a bunch of your questions today, listeners, so keep them coming in. I can see already a bunch of those boys have come in. Looking in terms of beyond VIX to everyone's other favorite VIX product, a.k.a. VXX, the one you guys actually like to trade a ton of. It's coming off again today, so all of you out there playing the erosion play, I know a lot of you are. You write into us every week. You're happy. It's off about 3% today. Shy of the 40 handle, about 38, almost 39 out there. Number one, Mr. Rock Lobster. I ask this to the meatball every week, and he gets it right every week, which to his credit, because he doesn't really study or remember anything, so he remembers this one. I think I know why. And I'm betting you're going to know the answer as well. If I were to ask you right now, what is the number one overall options position out there in VXX right now? By an order, it's like 2-1 more than anything else. What do you think it is?
Oh, gosh. Like the 2019 10 put or 10 put. Exactly. 2019 10 put.
AKA the primary holding of the Prime Meridian Fund. All that size is you. The 165,000 open still of those bad boys. That thing persists. That strike, people don't want to let that one go. I guess given today's action, maybe who can blame me? I know those puts have come in quite a bit in terms of juice, in terms of vol, but if we get this erosion continues, then perhaps we shall see more. Number two, the Jan 2019 15 puts, about 73,000 open there. Number three, the Jan 5 puts, also in 2019. So pretty much the whole Jan put strip there, 70,000 there. And then number four, March 35 puts, 67,000. And number five, around the top five, the March 32 puts with 64,000. I got to imagine those are perhaps some legacy positions. I don't know. Maybe I'll see when those are opened. Interesting, a little bit closer to the fire there. About 4.7 million contracts open there. Let's play the same game with SVXY, Mr. Rock Lobster, up today. So despite the fact that SVXY got declawed a few weeks ago, still up a little bit today. Obviously would have been up a lot more. So all of you out there who are still crying into your beer about that one, it's over the 13 handle today, so maybe that'll bring a smile to your face. Mr. Rock Lobster, what would you say is the number one position out here in SVXY, sir?
Besides my grumpiness with the SVXY take under,
you are not the only one by a country mile, sir. The people are still very angry about this one. I can't imagine. I'm surprised we haven't seen lawsuits announced yet, quite frankly. Just the amount of general anger about this, I've seen people sue for a lot less.
It was actually a question on. I took on viewer mail, not to get off the SVXY topic, but viewer mail on yesterday on Option Block. Because he's like, okay, I want to buy these long-term VXX puts. I'm like, well, you know what? They could screw everybody. Not that they just did, and now VXX held up. But what if they decide to make VXX 50%? It would really, really, really suck. So I'm not discounting the cover your behind mentality of anybody, but it would pretty much kill the activity in a lot of their products. So. But they never care about people that trade options anyway. They're like, oh, it's our product is great.
Judging by my interactions with all these different firms down Inside ETFs conference, I can confirm that is true. Most of them don't give a darn about the options on their ETFs. They really don't. They have nobody on staff who understands them, nobody who can talk about them coherently, and that they just see them as a nice little added cherry on top of the ETF. The options couldn't really give a darn.
And how much of the volume on their product is due to people trading options? They got
I think my voice is hoarse. I was trying to
today.
explain that to those people for a week, and I finally gave up because it was beating a dead horse, in this case almost quite literally. But you're right. I think we have a listener question about that again today, about the future of VXX. So we'll get to those. Yeah, the number one position out there in SVXY right now. I noticed you dodged the question, by the way, Mr. Rock Lobster. So you get a demerit. You probably wouldn't have guessed this one, though. It is the Jan 2019 25 put. It's been the number one position for a while. It's been open for a while, and 43,000 contracts open there. It's been open ever since the meltdown. I think even before. So I kind of have to wonder if maybe those were well timed, and maybe that count got frozen. I don't know, because why else would you not take those off by now? You know.
Exactly, and I think that there's a couple people that are stuck with some puts, and they're just like, well, we're just gonna take delivery and wait. So I think that's part of the problem. They don't know what to do.
Well, clearly that's the case here, because they haven't done anything on these. It's been many months, or at least over a month now, that we've seen this one. The top positions, and it hasn't changed, which, you probably want to take that bad boy off by now. Just a little guess there. Actually, options volume in SVXY, surprise, kind of light. About 750,000 contracts total OI, so not even 1 million contracts open out there. A lot of people, I think, have just given up on that contract. I can't say I really blame you. Let's see. Let's keep on rolling. It's time for the listeners, a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the voicemail. You guys ask us questions. Sometimes we ask you questions. This week, I was coming off the big, I went to RMC first, and then to FIA Expo, the Futures Industry Association Expo. They had two things in common. Well, really one thing. They were both obsessed with crypto. The Winklevoss twins spoke at both. It's so funny, because a year ago, if you had mentioned crypto at either of these events, they would have thrown you out of the room. They said, we don't care about that. That's for those crazy internet kids. And now it's prime place, it's keynote speeches, it's 3 or 4 panel sessions each, all about crypto, which leads us to our question this week. A little bit of a flash poll today coming into the show, so it's a quick one, only for today. If you're not listening live, unfortunately, you won't be able to vote. But get on over to Ad Options if you haven't done so already. We asked you guys, what would you rather see first? This has kind of been an ongoing debate these days. Would you rather see options finally listed on Bitcoin futures? Spoiler alert. I put this question now to SIBO, the heads of SIBO, and the head of options over there at CME. You can listen to him respond to me actually on our network right now at CME. And both of them seem to be kind of pumping the brakes on that a bit, saying, well, I don't know, we want to wait and see. We want to get a few more settlements under our belt. In the case of SIBO, they're putting on their techs. They have to complete their migration. So all those who were saying, Q1's wrapping up soon, so not going to be Q1. But I was thinking maybe Q2. I think that might even be early now, too. It might be much later in the year than we hoped. Maybe even 2019. So put that in your pipe and smoke it, all you Bitcoin lovers out there. So we ask, would you rather see options listed on Bitcoin futures finally, or would you prefer to have some more crypto futures out there, maybe Litecoin, maybe Ethereum, and have those get launched instead? So those are your choices, or you can choose save me from more crypto. Mr. Rock Lobster, I envy you. You were spared the crypto assault that was both of these conferences this week, but you get a little taste of it now. What is your pick, and then also what do you think our audience is picking?
I think the audience wants options, but I personally save me from crypto. That's where I am on that.
You said that, but you know when they launch the Bitcoin options, you're going to be slinging them, sir.
I hope they launch them, but I think by the time they launch them, Bitcoin will be like, $800,
Yeah, it'll
whatever.
It'll be
$80.
It'll be $8 again, and no one will care.
Nobody will care.
It'll be 2020, and Bitcoin will be done, and it'll be version 3.0 or wherever, and it'll be far too little, far too late. Right now, yeah, you're right. Our audience is in the early blush, 62% saying, give me some Bitcoin options. 23% on your tip, Mr. Rocklobster. Save me from more crypto. And 15% saying they want more futures. So interesting stuff out there. Last week we asked you guys, XIV, they kind of came for that one. SVXY, they kind of came for that one too. So how you guys getting your short vol fix these days? 32% saying short VIX calls or call spreads. 26% saying just getting short VIX, or excuse me, SPX or SPY vol, just going straight to the source. 22% saying long VIX puts or put spreads, and 20% going the hardcore way, short VIX futures. All right, we got a bunch of you guys chiming in here. Big blank saying, I'm liking the VXX erosion play. Question though, why does everyone talk puts on this trade? Why not selling calls or call spreads? Or maybe the combo, buying puts and selling calls or call spreads. Any back tests on that? I think you talked about a variation of this yesterday on the option block, Mr. Rocklobster. You're talking about, about VXX puts. But he's got a good point. Everyone talks about the puts. We just talked about them, how they're the size position open on VXX still right now. It's that entire jam put strip. So that's kind of the way everybody goes. I think if you've been around the show for a while, you can probably guess why the selling the calls straight up in VXX isn't that popular, or maybe even the call spreads. VXX, I think, as the Rocklobster says, is predictably crappy. It does trend downward, but doesn't mean it's immune. Go pull up the data points from the 5th and the 6th, because it doesn't mean it's immune to those crazy upward spikes. And when you have those, guess what happens to those short calls or call spreads? They tend not to perform that well. That's the interesting data point when you're looking at VIX calls, is, when you're looking at VIX calls or call spreads, they tend to underperform everything until those spikes happen, and then they blow the doors off everything. And then over time, that makes VIX calls competitive again. You're kind of doing the flip side here with the VXX calls. You're selling those, and then you're kind of opening yourself up to that risk. So it's got to be a fairly juicy call or call spread. I would never do the call. Maybe a call spread. This is one. I think we don't see it a lot for a reason. Mr. Rocklobster, you were just kind of talking about this yesterday on option block with the VXX puts. Is there a time where you like, maybe, I won't even say the calls because I know you won't like that, but anytime you like a nice vertical against the VXX puts out there?
When the vol is a lot higher already, it's probably the best time.
Is that a zone 4 play?
That's mostly a zone floor play, and you need some margin. And
you see, I got your lingo down now. I know your system.
Yes. So the problem is everybody wants to do it. What I've learned with teaching retail people is they think it's a really great idea because it's free money, and then the first time it blows up, a spread, because you don't get very good prices for spreads in VXX because the skew is insane. So you don't get a lot of premium for the sale. They're like, oh, great, I got this $1 or this $1.50 or something like that. And then all of a sudden it goes to $5, right? And they're not very happy with that. So I just say, you might as well wait till the vol goes crazy before you do that, because everybody's always obsessed with this sort of monthly income producing idea that's always going to be magical, and it works until it doesn't. But the contango play has been the best. You just have to figure out a way to ride out the uncomfortable times. So that's why I'm a more conditional vol trader. So once the vol moves somewhere, then I'm interested. If it's not doing very much, then I don't really care at all. So I would just say back testing, buying puts and selling calls. It looks good on a back test until it doesn't look good. And then, when VX goes from 20 to 60, and most people, usually with this product with VXX, I say, is there's almost always a time to cover, what I tell students is you don't want to sell the first vol pop because usually there's more after that one. Most people won't cover the first one. So you have the first one. Okay, you're down a little bit of money. They're like, oh, okay, it's vol. It comes in. And then you have the spike. That's the whole reason I say zone 1, 2, 3, 4. Wow, you just sold the spike in zone 1. Congratulations. You still got 3 more to go, possibly, right? So it's a lot easier when you tell somebody that. Wow, you sold 25% of the possible places VIX can land in a month. So anyway, short answer to that is it works till it doesn't. And normally, people try it when they think it works, and then you got problems. So there's almost always a chance, though. I'm saying almost always a chance to close those call spreads, but you've got to be on it really fast. Just decide you're going to take a little bit of a bath on this one, hopefully not more than 1 month's worth of sales, accept it and move on. But almost every time people hold on, watch it keep going up, it'll work, it'll come back, and then it blows up. And then you got problems. So
that reminds me, someone wrote in last week with something like this. We're like, hey, there's some crazy vertical you could trading right now in VIX. I think it was maybe 5-handle vertical, maybe more, for like 20 to 40 cents, something like that. What do you want to do? You want to buy it or sell it? And I just kind of laughed because technically the more probable answer is to sell, but do you really want to you want all that risk for 20 cents in your books? I don't want that, so I think I end up saying buy it. It's one of those things where, exactly, this is the same kind of question, like really, I got a bunch of other stuff. My luck, I'll tell you exactly what would happen, Mr. Rocklops, if I sold that. My luck is it would explode against me right in the middle of vol views. And I would see it happening, and I would be unable to hedge it, and that would be a double slap in the face. And for the stupid 20 cents that I got for it, I'd lose 480, and I would be very annoyed by it. So that would be my luck, is it would happen right in front of me, and I would be powerless against it.
And on live
on live radio. And you would see the tears coming down, and I would say, I knew it. Curse you, 20-cent VIX vertical. So yeah, we're not big fans of those. Let's see. Oh, here we go. Scott Somer. Let's see, maybe you know what he's talking about here, Mr. Rocklove. He says, does the 10-to-1 relationship between SPX and VIX still hold up? I've seen a lot of relationships between SPX and VIX in my day. I know there's about the 0.8 in the net correlation. There's a bunch of other things and ratios. 10-to-1 is not one I see too often. Mr. Rocklove, you know what he's referring to?
That's a good one. 10-to-1 ratio, and the only thing I can think of is like VIX, the Vega in VIX, because one VIX future contract is 1,000 Vega. I don't know if he's talking about that, or that's a. This is not even a call spread question. I don't even have an answer to that.
Yeah, we know. With VIX
SPY
verticals.
SPX.
Yes, there we go. That's what he's referring to. He's asking us, is the SPY SPX 10-to-1 relationship, is that still holding up? Yes, the answer to that is yes. I think that's pretty firm.
I'm good with that one.
Pretty safe there. So yeah, we don't know what you're referring to, Scott. Maybe give us a little more details on this and what exactly you're alluding to here. Jack K wants to know, how's my SVXY call vertical holding up? We'll take a guess. Blows chunks, all the calls out there suck. That's why I only advocated small dollar nonsense kind of silly trade, and that's exactly what that was. And the reason I put that on is because all you guys were just so super jacked about SVXY. I wanted to put on something silly just to have something fun to talk about on the show with you guys. But remember, it was small dollars. I think I netted it out for like 6 cents. It was a $10 vertical for like 6 cents. So it was nothing to begin with, and it's probably at a penny right now. I think if I recall the strikes, I think it was 20. Yeah, there was a size bid sitting on the 30s for a ton and for pretty juicy. So I used that to leg into a vertical for like 6 cents, something stupid. And again, I said it at the time. I said, hey, this is a flyer just for fun. This is a pure binary lottery trade. It costs more to take this thing off than was worth at the time. So this is going to be 0 or 100, and right now I think it's trending more towards the 0. But that said, I haven't pulled it up in a while. I'm going to go out on a limb right now and say those April 20s still not too juicy, but there's a little more time left. SVXY at 13. Remember, this was put on back when SVXY was actually SVXY, not the kind of limp, pale shadow that it is now. And we talked about last week on the show, all the vol got cut in half pretty much and all those things. So, yeah, anything vertical out there, not anything options, long options in SVXY, not looking too good. Here's one for you, Mr. You get all the mail, Mr. Rock Lobster, these days. I'm going to start taking umbrage to that myself. Brian Collimer saying, hey, well, this actually, I take it back. It's for both of us. First one's for me. He says, hey, Mark, you've been talking off and on about seeing how the straddles performed versus actual moves around the earnings. Check the Analyze Earnings tab in Thinkorswim sometime. Let us know what you think. That's a good point. I used to be a lot more familiar with the Toss platform when we were doing that daily show out there. I had to know all the nuances out there. We haven't done that in a little while, so I haven't had a chance to really, or a reason to fire up the Toss as much as I used to. Maybe I should go back in there and play around with it. If anyone would have some good data on that, those guys probably would. And that's good to know they're keeping up with that. I'll have to check that out. It's a good suggestion. Oh, he also followed up with this for you, Mr. Rock Lobster. So everyone getting some love on the show today. He said, also thought you might get a kick out of this. And it's exactly what you were referring to, Mr. Rock Lobster. A link to a story in Bloomberg saying lobster emoji gets 2 more legs following design complaints. Apparently, you guys out there in Maine, Mr. Rocklock, because this comes from Maine. Dateline is Maine. Comes from Maine. That there was an outcry over the incorrect number of legs on a lobster emoji. So let me ask you, Mr. Rock Lobster, A, was this you? Did you lead this outcry? And B, what are your thoughts there?
All I'm going is I did not lead this outcry, although I did think about it. I thought about jumping on the bandwagon, and I'm glad. Because when you think of lobster, you think of Maine. I don't care what anybody else thinks of. So they should have the correct number of legs.
Oh, and do you know what he's talking about with the Analyze Earnings tab? Have you used that?
I looked at it. I do my earnings analysis is actually far different from what other people do. So no, I have not looked at it, but I'll look at it just to see. I always do earnings. I do a post-vol analysis. So whatever the earnings vol is, I don't usually make any kind of pre-earnings wager except to kind of ride stuff and then close before earnings and then see where the juice is after. So sometimes you get a good shot at buying longer-term straddles and pick up the earnings cycle. So that is a trade I like, but I don't think the tab and cost would help me with that a whole lot.
Yeah, I did talk to the live vol guys down at RMC, and they are adding, actually, in fact, they sent me a link to the new version I have to play around with. They are adding a lot more of that data on there. So if you're using the live vol pro, it's coming in terms of they're expanding the amount of, if someone complained about the number of years recently on the show, they're adding more years of the data to you. You can do a lot more of this kind of analysis you're talking about. Again, I just saw the demo. I haven't played with it yet, but it sounds like they're kind of addressing some of that themselves as well. So good thing is, compared to a few years ago, there's a lot more choices. Of course, the ORATS guys have all this and a bunch of other stuff. There's a lot more places you can go to get that data than a few years ago. Liam wants to know, any cool takeaways from my trips to RMC or FIA? Crypto. That's it. Everybody and their mother. It's got to get some crypto these days. That's the kind of takeaway. It's inescapable. It's everywhere. It's the hot new thing. Still a lot of problems. Obviously, you guys, if you've played around with it, you've seen bid-ask spreads aren't there. Multiple different you talk about fragmentation in the option space. Forget about it in crypto. There's a million. I think there's 15 new exchanges announced last week or something crazy. And I put exchanges in quotes here. This comes from Leo, Mr. Rock. This is kind of something you were just talking about before, so probably should address it again. We kind of already have. This comes from Leo. It says, I have a bunch of VXX Jan 2019 puts. Well, you and a bunch of other people, looks like, judging from those numbers we just talked about. He goes on to say, should I be concerned about the issuer pulling an SVXY and suddenly rendering these puts irrelevant? You were just talking about this yesterday on the option block, Mr. Rock Lobster. I've kind of mentioned it before. It is suddenly a risk. I mean, I don't think it's a huge delta risk, but it is suddenly on the radar where it was not before. Would you agree, sir?
I do agree. I think it is one, and I think that might be they're looking at what happens with suits from option traders against maybe the OCC and everybody else if that happens. And they might go, well, nobody was really complaining about VXX too much in the crash we just had, so they might look away. But yeah, I would say it is a risk. I would say the risk is, before I would have thought, wow, why would you do that? Or the OCC would adjust. And now, so, I mean, at least a 10 to 15 delta at least, versus before I didn't really think that would happen. That's the whole reason why you trade the product, because they're not going to change the underlying.
Yeah, you think the underlying,
they're going to. The
underlying is kind of fixed, like that SPY SPX ratio, kind of fixed. You can kind of rely on it, you think. I did talk to some people at some of the clearing firms, and they were saying that they kind of got caught off guard by this whole SVXY. I think that maybe in the future if they had a little more warning, which again they were kind of caught off guard too. Maybe they would do some adjustments to this. I would have to think if this would happen again, it would be handled a lot better. It wouldn't be right after the close. It would have a lot more input from the clearers and other people and stuff out there. So hopefully. And I obviously don't want this to happen because this is a very popular product for a lot of you out there. But yeah, this is one that unfortunately however small that delta is however small that risk is of this happening, we know it's materially not zero anymore. That's one thing we've seen. So even if it's 0.001, it's still there. I'm not going to lose sleep over it, but and if you're long those puts, maybe you shouldn't too. But just be cognizant of it when you're out there slinging these things left, right, and center. Let's see. Let's do one more really quickly. This guy, PMGR, he wrote to send this in a while ago. We've been busy. He wants to know if 50 Cent finally had his day in the big upside explosion. Yeah, looks like he did. The macro risk guys actually broke it down. They said according to their calculations, this is back a couple days after the big blow up, so February 9th. They say that they figured he made about $200 million over time. That's back since he started doing it in January of the year before. So that includes all of his roles and everything. They figure he was up about $200 million. Again, as we said before, he's got something else on against that, so maybe that didn't look so good. But still, the options component that we could see and track, that looks like he had his day, as you put it. All right, so that's about all the time we got for your questions. Let's keep on rolling into the final part of the show, which Mr. Rock Lobster, some people approached me at Volaview, said it's their favorite, or RMC, it's their favorite to hear us embarrass ourselves week after week. Let's do it again. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Looks like VIX not playing with me, Mr. Rock Lobster. It actually moved away from me, so now I'm exactly a handle away. It's about 1575 to round out the show out here. I was at 1475. Still, that means I win because I was the closest. But it was looking a lot juicier there. By the way, Mr. Rock Lobster, did you see? I know you don't spend a lot of time on the old Twitters, but I tweeted out a picture from our FIA. They do an annual exchange leaders panel with exchange heads from all around the globe. And they completely ripped us off on Crystal Ball on that. They'd never done this before, and all of a sudden they had all the exchange leaders trying to guess where VIX will be at the end of the year or something, or maybe the end of the week, something like that. So I actually tweeted out a picture of it. You can see the graph behind them. So there we go. We're inspiring people, and they're ripping us off left, right, and central, Mr. Rock Lobster.
You know what? I'm quite sure because we've already seen my option pit stuff. People take it and they go resell it on eBay. So
they resell your courses on eBay?
They
really?
sell our courses on, yeah.
Wow.
Every month we're pulling stuff off like, stop that. Stop selling my stuff. So and Mark usually he gives them a call and says, you got to stop that. Yes, I think what is it? Imitation is the sincerest form of flattery. Now, if they would have pulled out a big crystal ball, then I think you should have gone there and kicked somebody in the shins and take some umbrage. And, you don't steal the stuff from my show.
Yeah, I should have started throwing stuff in the back row, being umbrage, just yelling umbrage till security dragged me away. Oh, speaking of umbrage, I think this came in from yesterday in your chat yesterday during the show. Option God saying umbrage for uniting against Longo in his absence. So I guess you guys are teaming up on me in the old option block yesterday when I was out. So at least one of our listeners coming to my defense. I thank you, Mr. Option God.
I don't know what that guy's talking about. I don't know what show he was listening to. That wasn't the show.
I have spies everywhere. They tell me all things. They know when you guys are coming at me behind my back. Well, my ears are open at all times. All right, 1575, so I'm about a handle away. Mr. Meatball was 1315, so he's over 2.5 handles away. Russell was kind of splitting the difference. He was at 14, he's about a handle and 3/4 away. So technically that means I win. Not my closest win. I was looking a little better. But still, I'll take it. Take what you can get these days. Let's see. So that means I guess I'll go first. I'll give you a little time. I'll buy you some time, Mr. Rock Lobster. How's that? And I was feeling it last week, and I'm still kind of feeling around that level. Maybe I'll go slightly higher just to give myself a little bit better chance. I'm going to say 15.15 coming next week. So 15.15. That is my prognostication. Mr. Rock Lobster, what you got?
Wow. 15.15. I am going to go 1475. But I think
you scumbag! I knew it. I knew you were going to do that. I said to myself, I should go back to my old strike because otherwise the Rock Lobster will take it because it is a good strike to be on.
It is juicy.
But there you go. See, I expected it, and you did not disappoint me. and that you scumbagged me as I expected. All right.
Hey,
old school.
What's an old floor trader if you don't get scummed every
Old
once in a while?
school SIBO Carpin coming back to, I'm there, I'm me too. All right, listeners. That music means it's time to bring to an end this fun volatility palooza, also known as Vol Views. My voice held up. Surprise, surprise. Got a little bit more to do, one more show to do today. So I think it'll hold up for that one. To join us again if you can in about a half an hour for TWIFO. We'll talk about this kind of stuff, some index vol, but also get into the commodities, maybe some ag, some metals, who knows? All sorts of crazy stuff on that show. We'll get into the skew, the vol, the unusual activity, open interest, all that good stuff. Check it out, TWIFO. Listen live every Friday, 1:30, or get it wherever you get this show. Easy to find. It's a fun one. You kind of like it. But before we go, let me go back around the horn. Mr. Rock Lobster, when you're not pulling down illicit copies of your stuff on eBay, what are you guys up to?
Well, there's always our gold course at Option Pit. There's my new vol newsletter. So if you want to learn about this vol stuff, once a week mentoring, group mentoring, entry, exit, learning about edge in the vol products and how to hedge, margin, and pair vol products off. Come and subscribe to my vol newsletter, and you will learn how to do it at a very, very reasonable price. I might add also all of our other goodies on teaching you how to trade vol and position, Gold Platinum Pro, all of the things at Option Pit. We also have Keith has been there since the summertime, has a great newsletter. People like the breakout bulletin. So lots of stuff that people like, helps them make money and learn how to trade these option things.
There you go. Head on over to optionpit.com. Learn how to trade these option things. They're kind of crazy. They have zones and all sorts of other madness. Check it out over there for yourself. You can continue the debate. SVXY calls versus puts. Will VXX go away? All this fun stuff and more over there at optionpit.com. And on behalf of myself and the Rock Lobster and, of course, Mr. Rhodes, who's out there in the forests of Kamloops, I want to thank all of you for downloading, streaming, subscribing, for joining us live, sending in questions, all the fun stuff that you guys do. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.